Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at AXT.
And let me just say right out of the gate, if you find our talks useful, please consider subscribe, like, and comment underneath. We really love seeing your thoughts down there. It helps the channel a ton.
It really does. And, before we jump into the absolute madness of this AXT chart, we want to mention VIP Algos. If you want help reading your trading charts more clearly, you can check out VIP Algos through the link below in the description.
Yeah, it's a super useful tool for investors.
Exactly. It's a TradingView indicator suite that basically gives you visual buy and sell chart alerts, trend direction tools, support and resistance zones, and take profit and stop loss planning areas.
And you can use it across a ton of markets, right? Like stocks, Forex, crypto, gold, indices.
Yep, pretty much everything. But we do have to remind you, VIP Algos is an educational chart analysis tool only. It is not financial advice. It doesn't place trades for you. And it absolutely does not guarantee profits.
Because obviously trading involves risk.
All right, always manage your risk and do your own research. And just a quick heads up, that link in the description is an affiliate link, so we may earn a commission if you use it at no extra cost to you.
Awesome. All right, let's move into the wealth building context. Because starting off by teasing a violent financial reversal, it sounds incredibly exciting. But as a cautious investor, you have to immediately ask how this fits into a long-term portfolio perspective.
Right, you can't just trade the news cycle.
Exactly. We aren't just chasing hype here. So is this just another speculative AI play, or is there a genuine multi-year supply shortage that you can actually anchor a long-term strategy to?
Well, to answer that, you really have to look at the multi-year macro shift that's happening inside, like every major data center on the planet right now. It is a massive physical transition from traditional copper wiring to optical interconnects.
Okay, so moving from electricity to light.
Yeah, exactly. And the thing is, this isn't just an optional upgrade. It is a forced evolution dictated by the laws of physics.
Which is basically the solution to the whole AI bandwidth bottleneck we keep hearing about.
That is the core of it. Think about it. When you wire thousands of advanced GPUs together to train a massive artificial intelligence model, the amount of data moving between those processors is just staggering.
And copper just can't handle it.
It really can't. Copper wires simply cannot handle that data transfer speed over any meaningful distance without generating massive amounts of heat. Plus, you get signal loss.
Right.
So if you try to push next-generation AI data through traditional copper, your data center effectively becomes a giant, highly inefficient space heater.
Which is terrible when power consumption is already your biggest expense.
Exactly. So the industry is being forced to switch to optical interconnects, which means using lasers to transfer data through light rather than electrical currents.
Okay, and AXT provides the foundational material required to actually make that happen. But my question is, why them? Why can't the tech giants just use standard silicon? We talk about silicon chips all day long on this show.
It comes down to the material science. Silicon is, well, it's what we call an indirect bandgap material.
Okay, meaning what exactly?
Which is just a fancy way of saying it's fantastic at computing, but it is terrible at emitting light. You literally cannot build an efficient laser out of pure silicon.
Oh, wow. I actually didn't realize that.
Yeah. So AXT manufactures indium phosphide wafers. And indium phosphide is a direct bandgap semiconductor. It efficiently converts the electrical signals from the GPU into actual beams of light.
So it's the physical bridge.
Exactly. It's the literal physical bridge between the electronic world of the computer processor and the optical world of the fiber optic cable. Without indium phosphide, the light just doesn't get generated, and the massive AI clusters can't talk to each other.
Okay, so that establishes the necessity of the material, but I still have to approach this with heavy skepticism, Like every company on the market has slapped the letters A and I on their slide deck over the last 2 years just to get a bump in attention.
Oh, absolutely. The hype is everywhere.
So how do we know this company is actually capturing that demand in real dollars rather than just riding a thematic wave?
That gives us the bigger picture. Now let's look at the fundamentals, because the numbers actually answer that skepticism directly. Let's look at exactly how their balance sheet and their operations are transforming to capture this very real physical bottleneck.
Let's hear it.
So in 2025, AXT was actually declining. Revenue was down. The market was basically ignoring them. But then we hit Q1 of 2026, and the reversal was staggering.
How staggering are we talking?
Revenue surged 39% year over year.
Wow. Okay.
Yeah, bringing them up to $26.9 million for the quarter.
That is a very sharp operational pivot for a single quarter.
It is, but the top line growth is only part of it. The profitability swing is the real story here. Operating leverage kicked in with incredible force. Their GAAP gross margins went from negative 6.4% to a massive positive 29.6%.
Wait. Negative margins to almost 30% positive in one single year.
Yes, in 1 year.
That tells me pricing power has completely shifted in their favor. I mean, you do not get a 35-point margin swing unless buyers are suddenly willing to pay whatever you ask because they literally have no other options.
And the math absolutely backs that up. That pricing power comes directly from their moat. AXT controls an estimated 60 to 70% of the global indium phosphide supply.
That's practically a monopoly. Or, well, an extreme oligopoly.
It really is. If you are building optical transceivers for data centers, you essentially have to go through them.
You know, I want to highlight for the listener just how brutal the barrier to entry is in this space, because it totally explains that oligopoly. To make these indium phosphide wafers, you have to grow single crystals in a laboratory environment.
Which is an incredibly delicate process.
It's insanely delicate. And AXT's crystal growth yields, meaning the amount of usable, pristine material they actually manage to get out of the process, are around 15 to 20%.
Which doesn't sound like a lot at first.
Right. But they are the undisputed industry leader with those numbers. Competitors, especially like domestic Chinese producers who are trying to replicate the tech, they're operating at yields below 10%.
It's a huge gap.
It is. Think about it like trying to build a perfectly symmetrical skyscraper out of millions of microscopic magnetic marbles without a single one falling out of alignment. If the temperature in the furnace fluctuates by even a fraction of a degree, the whole atomic structure fractures. The crystal is ruined, and you have to throw the entire batch out.
Exactly.
So going back to a simpler analogy, it's like running a bakery where your rivals are burning over 90% of the cakes they put in the oven. The cost advantage AXT has with a 15 to 20% yield is a profound structural advantage.
And to capitalize on that massive advantage, they just completed a historic follow-on equity offering in April 2026. $632.5 million.
Huge number.
Massive. And that cash is explicitly earmarked to double their production capacity at their Beijing Tongmei subsidiary by the end of 2026. They know they have the market cornered, and they are expanding the factory as fast as physically possible.
Okay, but this is where my alarm bells ring loudly as an investor. A $632 million capital raise for a company that had under $100 million in trailing revenue.
I know, sounds steep.
That is an unbelievable amount of share dilution for current investors to swallow. How does a business of that size efficiently absorb a cash injection that is over 6 times its annual revenue? That usually destroys a stock price.
It is a massive structural change to their balance sheet. And you're right, normally you would see the market just punish that level of dilution. But the market absorbed it because the demand curve is so certain right now. The institutional buyers effectively allowed AXT to de-risk their entire multi-year capacity expansion in one single move.
That gives us the business picture. Now let's move to the catalyst timeline, because that fundamental cash pile is sitting there diluting the share pool. But what specific events are actually going to unlock that value next to justify such a massive expansion?
Well, the ultimate validation event is coming up right now, which is the Q2 2026 earnings report. Management has explicitly guided for a return to structural GAAP profitability.
Okay, what are the targets?
We are looking at estimated earnings per share of 26 cents. If they hit that mark, it proves this first quarter reversal wasn't just a flash in the pan. It proves the new valuation paradigm is real and that this new pricing structure is sustainable.
And what about securing that future demand? Because doubling your factory capacity is incredibly dangerous if the AI hype cools off and you're just left with empty buildings.
But they are already securing it. And that brings us to the long-term agreements, or LTAs. We just saw a blueprint for how they are locking in this revenue. AXT secured a $25.4 million agreement with Nanjing Casela.
Okay, that's a solid contract.
It is, but crucially, it includes an 80% minimum take-or-pay provision. Hyperscalers and optical transceiver manufacturers are absolutely scrambling to lock in supply right now. They cannot afford to be bottlenecked. So AXT currently has a massive $100 million backlog.
Let's unpack that take-or-pay provision for a second, because to me, that is the strongest signal of market panic.
Oh, definitely.
A minimum take-or-pay means these tech giants are so terrified of running out of optical interconnect materials that they are contractually guaranteeing to pay AXT whether they actually take delivery of the materials or not.
Yep, they are paying for the peace of mind.
It completely de-risks AXT's future cash flow. But let me challenge that timeline. With a $100 million backlog, public take-or-pay contracts, and hyperscalers openly scrambling, isn't it highly probable that this Q2 profitability is already entirely priced into the stock by eager investors? Like, the market isn't blind to a guaranteed contract.
Catalysts tell us what could change the story. Now let's pivot to the chart. Because looking at how that anticipation is manifesting in the actual price action tells us exactly how much is priced in and how aggressively the market is reacting.
And what's the chart showing?
The technical momentum here has been historic. Honestly, parabolic is the only word for it. In early 2025, this stock was trading at roughly $1 a share. By March 2026, it hit $37.58.
Which is just a staggering 2,268% return.
And the momentum hasn't snapped. We are seeing continued breakout behavior on heavy NASDAQ up days, even right now in mid-June 2026. It's moving in lockstep with peer companies in the optical space like Applied Optoelectronics.
People are just buying the whole sector.
Exactly. Buyers are aggressively accumulating shares whenever the broader market ticks up, showing incredible relative strength.
Bringing a practical trader's view to this, though, volatility is intensely dangerous after a 2,000% run. When a chart goes completely parabolic like that, the swings can be vicious. Support levels are miles apart.
Oh yeah, the pullbacks can be steep.
Right. If you're looking at a chart that resembles a vertical rocket ship, having clean workflow tools like being able to clearly see support and resistance zones is absolutely critical for managing your risk. You cannot just blindly chase green candles at $37 when the asset was trading for $1 just a year ago.
No, you really can't.
And that connects directly back to why tools like VIP Algos are so useful for maintaining discipline when the market goes into an absolute frenzy like this.
The visual structure of the price action is vital when the fundamental story is moving this fast, for sure.
So the chart gives us price structure. But what does market sentiment look like? Because a chart screaming upward with that kind of euphoria usually has a very specific institutional narrative fueling it. Like, who is actually buying this at $37, and what are the analysts projecting to keep the momentum going?
Well, Wall Street has aggressively revised their price targets upward to match the new reality. And I mean aggressively. The blended target went from $30.75 to an astonishing $96.50.
That implies massive upside even from these parabolic levels.
It does, and institutional appetite is ravenous. We talked about that massive $632 million offering earlier, right?
Yeah.
The fact that institutional funds were willing to absorb that staggering level of equity issuance proves they are heavily backing this multi-year capacity expansion. They desperately want exposure to the bottleneck. On top of that, there is speculative market chatter regarding a potential initial public offering of their Beijing Tongmei subsidiary on the Shanghai Star Market.
An IPO of the subsidiary itself.
Yes. If that happens, it could unlock a tremendous amount of hidden value on AXT's balance sheet and raise localized Chinese capital to further accelerate their dominance in that region.
But let's step back and look at the broader macro environment for a second, because this creates a bit of a paradox. There are significant ongoing market jitters right now about China actively working to rival the West in AI chips. We hear about tariffs, trade restrictions, and tech wars dominating the news daily.
We do. It's inescapable.
Yet AXT continues to shrug off that overarching geopolitical anxiety and move higher. When a stock stops reacting to negative sector news, you have to ask yourself, is this peak euphoria? Are people just putting blinders on and ignoring the reality of international trade?
That sentiment picture is useful, but we still need to talk about the risks. Because you're entirely right to be cautious, and those blinders can be fatal. Triple-digit price targets and parabolic charts mean the downside risks are steeper than ever. We really must ground this conversation in reality.
Let's tackle geopolitics first then, because it feels like the massive elephant in the room that the market is just actively trying to ignore.
It absolutely is the elephant in the room. AXT is a U.S. company, but their manufacturing and their raw material sourcing are heavily concentrated in China through that Beijing Tongmei subsidiary.
Yeah.
Export controls are what the company themselves have explicitly called their most significant challenge.
Right, because if you're looking at wafer prices that are up 250%, that sounds amazing on a spreadsheet.
Sure does.
But if geopolitical export controls act as a physical bottleneck, suddenly you have an inability to actually translate those high prices into Western revenue. Like, The U.S. restricts high-end ships going to China, and in retaliation, Beijing could easily restrict the export of raw indium phosphide.
And then everything freezes.
Exactly. If those export permits are denied, the product is essentially trapped inside China.
That is a critical existential execution risk.
Yep.
If the trade war escalates, AXT is sitting right on the front lines, holding the materials both sides desperately need. And then, layered right on top of that geopolitical threat, there is the valuation risk.
I really have to sound the alarm loudly on this one. If you're analyzing this right now and you look at the metrics, AXT trades at an extreme price-to-sales ratio. We're talking about a multiple of 44.49.
It's steep.
It's incredibly steep. You have a market cap floating between $6 and $8 billion, stacked against just $88 million in trailing revenue. A 44 times sales multiple is incredibly dangerous territory. It means perfection is priced in for years to come.
Right, there's no room for error.
Zero. If execution stumbles even slightly, or if those Chinese export permits are delayed by even a single quarter, growth slows down, and that 44 times multiple will collapse violently.
You do have to look at the other side of that equation, though. The premium is steep, absolutely, but consider what the market is actually pricing in. The forward revenue run rate from that new doubled capacity in Beijing is meant to rapidly compress that premium.
Okay, assuming they sell everything they make.
Right. The multiple looks terrifying if you only look backward at trailing revenue. But with a $100 million backlog and hundreds of millions in fresh capital being deployed right now, the denominator in that price-to-sales equation is designed to expand exponentially over the next 4 quarters.
So with everything on the table, what's the final verdict? We have massive fundamental upside, an expanding near monopoly on a critical material for the AI revolution, but we're also staring down severe geopolitical supply chain risks and a highly unforgiving valuation multiple. How do we actually synthesize this into a cohesive view?
Well, the final bullish score comes out to an 8 out of 10.
Solid score.
Yeah. If we distill this down to an elevator pitch, AXT is the indispensable bottleneck supplier for AI optical interconnects. As the entire global data center footprint transitions from copper to optical to accommodate artificial intelligence, their proprietary yield advantages and their locked-in long-term supply agreements give them incredible operational leverage.
But it's not a quick flip.
No, the target horizon here is absolutely a multi-year view. You have to be prepared to weather the geopolitical noise and the extreme valuation volatility over a long-term perspective. And of course, as always, this is just an analysis of the landscape, not financial advice.
Right. And if you want a cleaner way to visually manage that extreme volatility on your own charts, check out VIP Algos through the link below in the description. Like we mentioned, it's a TradingView indicator suite with visual buy and sell alerts, trend direction tools, support and resistance zones, and TPSL planning areas.
It's a great setup.
It is. It can really help make charts easier to scan. But again, it is still only an educational chart analysis tool. It is not financial advice, it does not place trades for you, and it does not guarantee results. Trading involves risk, so always do your own research and manage your risk carefully. And again, this is an affiliate link, and we may earn a commission at no extra cost to you.
And if this analysis helped you understand the mechanics driving the market today, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua episode.
But before you close out, just think about this for a second. In an industry spending hundreds of billions of dollars racing to build the most advanced artificial intelligence the world has ever seen, the ultimate winner might not actually be the tech giant writing the smartest code, or even the designer mapping out the biggest GPU.
That's a great point, right.
Right. The ultimate leverage might just belong to the company controlling the microscopic light switches that allow it all to communicate. It really makes you wonder what other hidden, totally unglamorous bottlenecks are just waiting to be discovered deep inside the supply chain.